Amazon flatlined at 0% as Lab scores at 58. Hold. Pre-market volume dried up completely, reflecting institutional hesitation ahead of capital expenditure reports. This stagnation stems from rising infrastructure costs as fulfillment center automation expenses spiked 20%. Our full teardown reveals whether this quiet period is a trap or a massive buying opportunity. Pre-market alert. Amazon's logistical expansion is a desperate attempt to offset a cooling cloud infrastructure as their Trainium 2 chips struggle to match the 8 terabytes per second of memory bandwidth provided by NVIDIA's Blackwell B200. While management touts freight efficiency, the silicon reality is a thermal wall, Trainium 2's power density. The heat generated per square millimeter of silicon limits cluster scaling compared to the proven CoWoS chip-on-wafer packaging that allows high-speed interconnects between processors. Amazon is pivoting to logistics because their custom silicon architecture lacks the massive HBM3E high-bandwidth memory that enables near-instant data transfer, required to dominate AI workloads. This hardware bottleneck forces a reliance on low-margin shipping volume to protect their $2.6t valuation. Quarterly financials showing modest revenue momentum for Amazon. Pre-market alert. Amazon flatlines at 0% pre-market as its new business logistics expansion faces macroeconomic headwinds. By Q3 2026, normalizing yield curves, the interest rate gap returning to historical norms, will compress Amazon's operating margin by 50 basis points. While Kalshi's 6.8% recession risk indicates near-term stability, the Fed's 3.63% interest rate acts as a friction wave against Amazon's capital-intensive LTL, less-than-truckload freight shipping, which pulls cargo from multiple businesses. Simultaneously, new trade war policies targeting forced labor threaten supply chains, risking Amazon's 16.6% revenue growth. With unemployment at 4.3%, rising labor costs collide with these logistics rollouts. The macro wave is no longer accelerating. It is a wall of margin-eroding policy constraints. Amazon reported earnings per share of $1.61, missing the Wall Street estimate of $1.67 by 3.6%, a miss that raises questions about near-term guidance. Amazon is trading below its 20-day average, currently at $9. Pre-market alert. Amazon's freight headlines are a shiny object. Management's official line this quarter broadens freight network to support businesses across the U.S. 3 words repeated in every press release, investor deck, and CNBC hit. That phrase is designed to make you feel scale, ubiquity, and a new profit lever. What it's designed to make you not think about. The 195,774 shares insiders net sold in the last 90 days. That's not a liquidity event. That's a pattern. Historically, this magnitude of selling precedes margin compression or capex overruns. And while the PR machine touts LTL expansion, the last earnings call buried a minus 3.6% EPS miss, the first in 4 quarters. What management is saying is growth. What the lab hears is, we're spending to outrun slowing unit economics. The momentum breakdown for Amazon. RSI sits at 37, pointing to neutral zone, waiting for a clear directional signal. MACD is currently bearish, with downward histogram pressure. Pre-market alert. Amazon just surged 0%. This is an urgent report. AWS remains the premier digital power grid for AI, but the bull case breaks if electricity shortages halt data center expansion. The pro-level question is whether Amazon can sustain a 24.8x forward PE, the ratio of share price to projected earnings, while facing universal tariffs that threaten retail margins. If Amazon secures power for its next-gen clusters by Q4, we expect a move toward the $315.67 price target. However, if power constraints stall CapEx, capital expenditures used to acquire physical assets, the stock will retest its $196 annual low. AI score of 58 confirms a cautious hold. Amazon's AWS growth just hit a 3-year low. This isn't a blip, it's a margin reset. Is Amazon.com a buy at current levels or a trap? Let's hear your thesis below. This isn't financial advice, it's engineering-level analysis for education only. Markets move fast, numbers change, and past performance never guarantees future results. Always run your own research before pulling the trigger. The lab's signing off. See you in the next deep dive.